Bismillahirrahmanirrahim, guys. Rabbi zidni ilma, Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatan min lisani yafqahu qawli. Today we are solving October-November 2022, 7707 paper 12. Alright. Before I start the paper, I wanted to inform you that all revenue generated will be donated to Palestine, inshallah. So please do make sure to like, subscribe, and share my channel. Alright. So the first question we have over here says, which transaction will increase both assets and capital by the same amount? Alright, so look, it says a credit customer settled his account after deducting a cash discount. Goods were sold for cash at a price higher than their cost price. Rent received included an amount prepaid for the next accounting period, and the owner repaid a business loan from his personal bank account. So look, first of all, what you guys need to understand is that sales minus cost of inventory is equals to profit. Okay, so capital increases by the profit earned by selling goods at a higher price. So the cash, on the other hand, also increases by the same amount. So inventory decreases by the cost of goods. So goods were sold for cash at a higher price than their cost. The answer is going to be B. Alright, moving on to question 2. It says on 1st June 2021, Sue's capital account had a credit balance of 120,000. During the year ended 31st May 2022, she withdrew goods costing 1800. The loss of the year was 14,200. So look, the question says what was the credit balance of Sue's account? So first of all, let's find closing capital. Let me write CC. Closing capital is opening capital minus loss minus drawings. Okay, so opening capital is how much? It's 120,000. Alright, how much is the loss? It's 14,200. And how much are the drawings? 1800. So once you solve them, closing capital will be 104,000. So the answer is 104,000. The answer is going to be A. Question 3, guys. Question 3 says Bilal purchased goods on credit from Asim. Where should Asim record this transaction? Cash book, nominal ledger, purchases ledger, or sales ledger? So look, Asim has sold goods to Bilal. So Bilal is a trade receivable. Bilal is what? Bilal is a trade receivable for whom? For Asim. Bilal is an asset for Asim. The transaction will be recorded in sales ledger, and total sales will be recorded in nominal or general ledger. So where do we have sales ledger and nominal? In D, 2 and 4. Next question, it says Abdul sells goods to Rekha on credit. Some goods were damaged in transit. Alright, transit is when they were carrying goods, some goods were damaged. Which document would Rekha send to Abdul? So Abdul is trade payables. Abdul is what? Abdul sells goods to Rekha. So for Rekha needs to pay money to Abdul, pay money. Alright, so Abdul is what? Trade payable. Abdul is trade payable for Rekha. When Rekha returns the damaged goods, then liability decreases. Alright, and when liability decreases, Rekha will send a debit note to Abdul to reduce liability. So the answer is B. Question 5. What is not shown on an invoice? So look, it says amount of trade discount, date payment made, details of goods supplied, terms of payment. So look, invoice is a document which shows details of goods supplied. Alright, invoice, another word for invoice is like bill. Okay, is a document which shows details of goods supplied. So amount of trade discount and terms of payment. Alright, the date made is not shown. The date payment made is not shown in the invoice. Alright, part B. Question number 6 we have over here. It says on 1st September Peter sent a check to his credit supplier. Remember, it's credit supplier John. This was correctly entered in John's books. On 10 September, the check was returned unpaid due to lack of funds. Which entry should be made in John's book? So look, when check was received by John, he passed the entry. When John received the check, John received check, he made the following entry: bank, Peter, credit, credit. Okay. So when the check was returned unpaid due to lack of funds, John will reverse the entry. John will do what? Peter debit, bank credit. That's it. That's all that he's going to do. So the answer is D. This is the correct entry, but since he did not make it, he has to reverse it like this now. Now 7. It says which entry should be made to post monthly totals of discount allowed and discount received columns of the cash book. So look, discount allowed is an expense, it is debited. Alright. Discount received is an income, it is credited. Discount allowed, debit. Discount received, credit. So what's the answer? C. Question number 8. Okay. Question number 8 says, Jaswinder maintains a petty cash book using the impress system. The monthly impress system is when you put in money again and again so that money is maintained. The monthly interest of $100 is restored on the first day of each month. In September, the petty cash book showed the following: total expenses and total receipts. How much cash did Jaswinder need to restore the interest? So look, Jaswinder, I'll just say Jas, spent 83, alright, and he received 7. So 83 minus 7, how much money he has in his till? 76. So basically $83 went out, $73 came in. How much total money went out? 76. So he needs to restore the amount by $76. 9. Sadiq's trial balance failed to balance. The debit balance totaled, alright, the debit column 12,250 and the credit 12,200. The following errors were discovered. No entry had been made for cash sales. Okay. The total of discount received account 50 had been omitted from the trial balance. What were the total of trial balance after the errors had been corrected? So look, debit side is how much? In order to find debit side, we will do debit. Debit side. Debit side is going to be 12,250 plus cash, which is 150. So debit side is 12,400. Credit side is going to be how much? Credit side is going to be 12,200 plus sales 150 plus discount received 50. So it's 12,400. So after errors are corrected, both sides of the trial balance would be 12,400. Alright. No entry had been made for 150. I just made an entry. A total discount received 50 had been omitted. I added 50 over here as well. Okay. I hope you guys get it now. Question number 10. It says $68 paid by credit transfers for insurance was entered in the accounting records as 86. Okay, no problem. Then it says which double entry will correct this error. So look, insurance expense payment was overstated. Alright. So insurance is an expense overstated debit. Now we have to correct it. So we will credit it. So the correct entry would be that we need to record bank, because money will come into the bank, our asset would increase and insurance would decrease. Okay. So the answer is A. Question number 11, guys. So question number 11 over here, it says that after the preparation of her income statement, Emma discovered the following errors. A debt 1500 should have been written off as irrecoverable. Okay. Meaning you're not getting this money back. Happens to most of us, don't worry. No adjustment had been made for the rent prepaid. Okay, the rent has been prepaid by Emma, 2,800. The draft profit was 35,000. Alright. So look, guys. first of all write draft profit DP 35,000. You need to add rent prepaid because we already deducted this, alright? It's not adjusted, it's rent for the future. We already deducted it. We won't deduct it this year. It's for the future, alright? So it's 37,800. And then less irrecoverable debt. Alright, so basically this is debt which money we won't recover. So 36,300 is the correct profit. Question number 12. Hamid purchased a motor vehicle from an overseas motor manufacturer. Which expenditure relating to the motor vehicle is capital expenditure? So look, insurance, petrol and replacement tires. Alright, insurance, petrol and replacement tires are part of revenue expenditures because you will do it again and again and again and again. Delivery charge is a capital expenditure, alright, because all expenditure from acquiring to putting the vehicle in a usable state is part of capital expenditure. So the answer is A. Alright, hope you guys get it. Moving on to next question, it says, when Tile purchased a motor vehicle for 35,000, he estimated it to be used for 5 years, and then sold scrap value. When Tile depreciated the motor vehicle using straight line method at a rate of 20% per annum, what was the accumulated depreciation on this motor vehicle at the end of year 2? Okay. The formula is cost minus scrap value divided by life. Alright, and you will multiply it with 2 because we want to find it for 2 years, so it's 12,000. On the first day of his financial year, Jason purchased a new machinery costing 20,000. On that day, his old machine had a book value of 6,000. Okay. Jason was allowed 4,500 for the old machine in part exchange. He paid the balance by check. Machine is depreciated 20%. How much should be charged to Jason's income statement for the year? So look, first of all, let's calculate depreciation dep on new machine. So it's going to be 20,000 multiplied by 20%. So it's 4,000. Depreciation on new machine is 4,000. Alright. So what's the loss on sale of old machine? We need to calculate the loss on sale of old machine. Loss on sale of old machine. It's 6,000. It had a book value of 6,000. We sold it for 4,500. Loss is 1,500. Okay. So total expenses to be charged in the income statement. Depreciation is 4,000. Loss on new machine is 1,500. So it's 5,500, guys. Okay. Question 15. Martha rents out part of its business premises. On 1st September 2021, she was owed rent 1,500. On 31st August 2022, she was owed 1,800. Okay. Now, during the year ended 31st August 2022, Martha received rent of $6,000. Alright. So, how much was transferred to Martha's income statement for the year? So, look, rent transferred to income statement, basically Martha received 6,000. Then you will add 1,800. She owed 1,800. Alright. She was owed. Yani, sorry, not 18,000, 1,800. They need to pay Martha 1,800, and 1,500 was for the previous year, not this one. It was the previous month. Alright. So we will subtract 1,500 because we want to just find out for the current year. So it's 6,300, guys. The answer is C. Okay. Question 16 now. So now moving on to question 16, it says that Parker received what? Parker received cash from Alexei for a debt that had been written off as irrecoverable. How should Parker record this in his accounts? Alright. So first of all, Alexei debt written off was recovered. Alright. So after reinstating Alexei as a trade receivable, cash is received from him. Alright. So you would debit cash because cash is received, and bad debt recovered would be credited, bad debt recovered. So basically the answer would be B. Moving on to question number 17, it says, why should inventory be valued at lower of cost and net realizable value? So look, lower of cost or net realizable value, basically this principle states that inventory should not be overstated. This is done so that your profits are never overstated. So the answer is D. Question number 18, it says, how would current assets be listed if they are arranged in decreasing order of liquidity? So first of all, look, it says so look, cash is the most liquid one. Alright, that's how we already know that B is the answer. But after cash, you have bank, then trade receivables and inventory. So this one was a very easy question, honestly. Question number 19 now. During the year, Sam paid advertising expenses, some of which related to the following financial year. Sam made an adjustment for this when preparing his financial statement for the current year. What was the effect on Sam's financial statements of making this adjustment? Okay, so look, it's prepaid expenses decrease expenses of the current year. Alright, prepaid expenses decrease expenses of the current year, and as a result, profit increases. So prepaid expenses increase current assets in the statement of financial position as well. So the answer is B. Alright, prepaid expenses increased profit for the year and increased current assets as well. Question number 20 says, members of a limited company have limited liability for the debts of that company. What does this mean? So look, members are equally liable for the debts of the company. Members are liable only up to the value of their personal assets. Members are liable only up to the value amount they agreed to pay for their shares. Members are liable only up to the value of the debentures they hold in the company. So look, for this question, actually, limited liability of members or shareholders actually means that they are only liable to lose their investment to pay debts of a company in case of bankruptcy. So the answer is going to be C in this case. Okay. Moving on to question 21. A limited company provided the following information: non-current assets, ordinary shares, debentures, net current assets. So what were the retained earnings? Look, retained earnings, basically you will do non-current assets plus net current assets. Alright, so that's basically ordinary share capital plus retained earnings, alright, plus debentures. Alright, so your answer is going to be ordinary share capital is how much? 35. Ordinary share capital, you will do 35,000 plus 30,000. Alright, basically non-current assets and net current assets, which are 35,000 plus 30,000 are equal to what? Your ordinary share capital, which is 40,000, plus your retained earnings, which we don't know, plus debentures, which are 10,000. So retained, you will add this side, 35,000 plus 30,000, that's 65,000, is equals to 40,000 plus 10,000, that's 50,000, plus retained earnings. So retained earnings is equals to 65,000 minus 50,000, you get 15,000, guys. Okay. Question number 20. Which one are we on now? Question number 22. Okay, perfect. So look, in question number 22, it says, what is included in the equity of a limited company? So in this question, basically, you need to understand the definition of equity. Equity basically refers to ordinary share capital plus all reserves. All right, ordinary share capital plus all reserves. So in this question, equity will be ordinary share capital plus retained earnings plus general reserve. So your answer is going to be A. Moving on to question number 23, it says that the financial year of a club year ends on 30th September. During the year ended 30th September 2022, the club received an interest-free loan from a member. In which of the club's financial statement will this appear? So look, income and expenditure account and statement of financial position, receipts and payments account and income and expenditure account, receipts and payments account and statement of financial positions, or just statement of financial position. So interest-free loan is receipt for the club and will be recorded under receipts and payments account. Alright, so that's why you eliminate A and D. And it will also be recorded under non-current liabilities in the statement of financial position. So your answer turns out to be C. Question number 24 now. It says that a club had an accumulated fund at the start of the year 18,000 and at the end of the year 16,200. And then it says new equipment costing 1100 was bought during the year. Total expenses for the year were 9550. The only income came from subscriptions. How much were subscriptions for the year? So look, accumulated fund at end is equals to accumulated. Let me write it down. Accumulated fund at end is equals to accumulated fund at start plus subscription minus expenses. Alright, so you're actually going to do what? 16,200 is equals to 18,000 plus subscriptions minus expenses, which are, how much are the expenses? 9550. You will subtract 9550. Alright, so this becomes actually 16,200 is equals to 18,000 minus 9550 is 8450 plus subscriptions. So subscriptions is equals to 16,200 minus 8450. So that's 7750. So your answer turns out to be A. Now next question, it says that Dan makes t-shirts which are stamped with design using fabric paint. He provided the following information. What was the total of direct cost? So look, direct cost would actually be fabric for shirt plus fabric paint plus wages of machine operators. So direct cost gonna turn out to be 10,000 plus 4,000. This 10,000 plus 4,000 plus 16,000. So that's 30,000. Alright, so the answer is C. Question number 26. It says in a manufacturing account, carriage on raw materials was incorrectly treated as factory overhead. How did this error affect prime cost and cost of production? So look, carriage on raw materials is a part of prime cost, alright? So the effect of error will be that prime cost will be understated, but cost of production will remain unaffected. This is because instead of prime cost, carriage was added to production cost by being included in factory overhead. So the answer is C. Question 27. It says Chan provides the following information. Non-current assets increased, inventory decreased, trade receivables decreased, bank overdraft increased, trade payables increased. Okay. What was Chan's profit? In this question, in order to find profit, you will first find out opening capital, which is 10,000 plus 2,500 plus 1,500 minus 800 minus 1,000. So this turns out to be 12,200 opening capital. Then we have closing capital. Closing capital is how much? 12,000 plus 2,000 plus 1,300 minus 900 minus 1,900. Alright, so this turns out to be 12,500. Subtract them both. 12,500 minus 12,200, you have an increase of 300, so that's your profit. Moving on, we have question 28. Aruna does not maintain a full set of double entry records. She provided the following information. Okay, what was the cost of her purchase? So look, she has trade payables, starting of the year, ending of the year, purchases made and payments made to supplier. So basically what, first of all, credit purchases. First, let's calculate credit purchases. So credit purchases are going to be, in this question, you will add 27,000 credit purchase, okay? 27,290. Then you will add 168 because that's how much you have purchased, and then you will subtract the closing inventory, the opening one. You will get 171,840. So total purchases are credit purchases plus cash purchases. So you will add 16,000 to this. You will get 187,840. Okay. Question 29. Sabu provided the following information. What was the average inventory for the year? So look, first of all, let's find out rate of inventory turnover. Okay. So that's cost of sales. Divide it with average inventory. So cost of sales are going to be 250,000. Alright, minus, what will you minus? You will minus basically gross profit, which is 20% of 250,000. Alright, so you will subtract 20% of 250,000 and divide it with average inventory. Alright, which we don't know, but average inventory turnover is 5, so 5 is equals to. So once you solve, you will get an answer of 40,000. Question number 30. Nasima provides the following information: revenue, gross profit, profit over the year. What was the profit margin? Her profit margin will actually be profit for the year is 3,500. Multiply it with 100. Alright, and divide by total revenue, which is 28,000. So you will get 12.5. Question 31. When calculating liquid asset test ratio, what is compared to liquid assets? So look, the formula to calculate liquid or asset test ratio is current assets minus inventory divided with current liabilities. Alright, so the answer is A. Alright, what is compared to liquid assets? It's current liabilities. These are liquid assets, these are current liabilities. Question 32. A trader provides the following information. Gross profit increase, gross profit margin remained the same, profit margin increase. So what would explain these changes? So of course, if in the second year sales volume has increased, operating expenses have decreased, resulted in greater profit margins. Alright, gross profit is still the same, but it means expenses have decreased. So this. Question 33. It says a business renewed an insurance policy. The total amount paid was charged as an expense in the income statement for the year, even though half related to the next financial year. Which accounting principle has not been applied? Alright, so the accounting principle that not is applied is matching, because matching principle state expenses of current year should be recorded in accounting books. Alright, only current year, not the next year. 34. What is meant by business entity concept? Basically, business entity concept principle states that transactions are recorded in business books from the point of view of the business. So the answer is D. Okay, which statement is not correct about reasons for using international accounting standards? Look, international accounting standards assist in making comparisons between companies by improving reliability of accounting information. So, but it does not make preparation of financial statements less time consuming. So the answer is D. So I hope you guys were able to understand all the questions. If not, you guys can reach out to me in the comments below. Thank you for watching.